So good evening everyone. My name is Maurya Hanspal, and in this session we're going to continue our previous session of capital structure. So in the previous session on capital structure, we tried to discuss about the capital structure, that what exactly is the capital structure of a company. Ideally, when one looks from the financial management's point of view, and particularly talking about the courses of BBA or BCom or MBA, we are just told that there are just two sources of finance from which the company can raise money. One is equity and the other is debt. And further, we calculate the cost of capital. But what happens in the ideal scenario? There can be other sources of debt or other sources of the finances as well. The company can also raise finances in terms of the preference shares. There can be also in terms of some long term obligations, some short term obligations, or might be the government, or might be like the company had taken loan from the government in the form of some treasury bills or government bonds or government notes and so on. Further, there can be some kinds of hybrid instruments as well, some kinds of alternative investment funds as well. So the company can raise finance or the company can raise money from all these sources of finance rather than just equity and debt. Then we also tried to understand how to calculate the cost of debt. Then we further had a top discussion on the differences between the systematic risk or the diversifiable risk. And we also talked about the different kinds of betas as well. We talked about the aggressive betas, that was the beta like which the value was greater than 1. We also talked about the defensive beta, the value which was less than 1, and also the market beta where the beta was equivalent to 1. Also, we talked about the differences between the systematic risk or the non-diversifiable risk. It is one and the same thing. It is also called the market risk, which is denoted by beta. Beta is the proxy of systematic risk. Also, we tried to discuss upon the unsystematic risk or the diversifiable risk or the company specific risk, which can be diversified through the policies made by the company or through the creation of a portfolio. We also discussed upon that. And then we talked about the most important model of calculating the cost of equity, KE, that is the CAPM model, capital asset pricing model. And also we solved a further numerical on that. So going back to the formula of the CAPM model, the CAPM model stated that the cost of equity, which is represented by KE, is equal to the risk-free rate plus you have the beta, which is a proxy of systematic risk or the non-diversifiable risk. It is one and the same thing. Brackets may you have RM minus RF. RM is the return on market, the excess return that you are getting over the risk-free rate. And we tend to discuss the differences between the RM and RF also. Okay. And this term and this difference of RM minus RF is also called the market risk premium or the market premium. Okay. So talking further about the CAPM model, we also solved like a numerical on the CAPM model as well. So taking further the CAPM model, so if someone asks you that what do you mean by capital asset pricing model or what do you mean by CAPM model, because this model is particularly asked in a large number of corporate interviews when you are going for the job like somewhat related to finance or management of the portfolios. Okay, so you can say in one line that the capital asset pricing model, it tells us or it tends to establish an equilibrium relationship between what? Between the cost of equity and the systematic risk, which is denoted by beta. So basically, it is expressing or denoting an equilibrium relationship between the cost of equity KE and beta, which is nothing but the systematic risk or the non-diversifiable risk. Beta is the proxy of systematic risk. So the CAPM model is taking into consideration only the systematic risk. Now the question arises, like the second question which they ask in the interviews, that why you are not taking into consideration the unsystematic risk here. So one can say we are not taking into consideration the unsystematic risk because the CAPM model is assuming that all the unsystematic risk or the risk which could be diversified away has already been adjusted while creating a portfolio. अपना तुम portfolio तुम पहले ही बना चुके हो, तो अब तुम्हारा कोई भी unsystematic risk नहीं है portfolio. So you are just taking into consideration the market risk, which even the portfolio cannot give away with. Okay, so that is one thing. But in recent times, we have seen a large number of people have also tried to include what? A large number of people have also tried to include the unsystematic risk as well in this CAPA model to give a clear indication of the cost of equity. Okay, so what do? They add what? An error term. They add an error term. E is the error term and I is the security. Okay, further, see, since I have taken I as the security, you people can take B as a security or C as a security. It is all upon you. But ideally, in this formula, we take it as EI. So I is basically the unsystematic risk or the diversifiable risk of the particular security that we are taking into consideration. Okay. So ideally, the formula for the CAPA model is itna bas. But for the further understanding of this model, some people believed even after complete diversification, even after making the complete portfolio, there is market risk. But still हो सकता है कोई छोटा मोटा कोई company specific risk भी हो. That company specific risk is nothing but the unsystematic risk or the diversifiable risk. So this is just a kind of assumption that we are taking कि अगर क्या पता कंपनी का कोई रिस्क हो, ठीक है, कोई स्पेसिफिक कंपनी रिस्क हो. So this is nothing but the standard deviation, like which we talked about, like when we were talking about the systematic risk. So this is nothing but the standard deviation of the error term, like which is denoted by E, which is the error term, or the non-explainable risk also we can say. The risk which is not explained by the market. The risk which is explained by the market is the market risk, whereas the risk which is not explained by the market is the non-explainable risk. Okay. Also, like a large number of people, they tend to use what? They tend to use the coefficient of determination, which is R square, though I'm going in terms of like statistics and combining it with finance more here. But what do? They take it as R square, which is nothing but the coefficient of determination, which is nothing but the coefficient of determination. This coefficient of determination is a statistical tool which has found its way in into the theory of financial management. Okay, so this coefficient of determination, it is a measure of the systematic risk or the explainable risk. Matlab that risk which is the market risk or which is explained by the market, and something which is 1 minus R square, it is the non-explainable risk or the diversifiable risk. Okay, so this coefficient of determination is also used in very kind of advanced models, but for your understanding, EI is perfect. Okay, and even this, like how do we get this coefficient of determination? For all of you, like who people who have interest in the field of financial management, they know the concept of correlation. Okay, they also know the concept of covariance. Okay, so this coefficient of determination is nothing but your square of coefficient of correlation. जो coefficient of correlation की जो value आती है, when you try to calculate purely in terms of statistics, जब उसका तुम square कर देते हो, you get the coefficient of determination. A lot of people don't know that how to calculate coefficient of determination from coefficient of correlation. They try to see like different formulas online. They try to like derive the different formulas. But if you're just taking the square of coefficient of correlation, you'll get the coefficient of determination. I'll try to organize some classes on that as well, like sometime in future. But as for now, we took EI, which was a measure of the unsystematic risk or diversifiable risk. अगर कंपनी के पास क्या पता कोई कंपनी स्पेसिफिक रिस्क लेफ्ट आउट हो गया हो. In some models, people also try to include आगे प्लस करते हैं, which is nothing but the size premium. Size premium. Okay, a lot of the books, a lot of the people in various colleges will tell you the CAPA model as that set. Okay, but ideally, when you go for higher finance, for higher financial management, and try to calculate the cost of equity or maintain the portfolio of your clients, this also includes this company specific risk premium and also the size premium. Company size premium. अब size premium क्या होता है? Size premium is basically, let's take a small example. We know that what a large cap company is. A large cap company is a very strong company, a very fundamentally strong company, right? The company which has become a mature company into that industry. Okay, the company has proved itself over the years, and company is sustaining itself on a steady growth rate. Okay, but these large cap companies, they have a fewer potential for growth as compared to small cap companies and mid cap companies. Why? Because the large cap companies have already become large, and they have realized their full potential from the past activities. So the scope of growth is limited until and unless a new theme comes into the market and they take that theme. Okay, but these small companies, small cap companies, or the mid cap companies, they're still to become a large cap company, right? They still have a huge prospect, a huge growth prospect in future, or a sustainable growth rate in future. Okay, so if you are investing into a large cap company and ignoring the small cap companies and the mid cap companies, in that case our return might be less, because in terms of large cap companies which are large in size, we are not taking risk, because we know that those companies are established, those companies are mature, and those companies won't go anywhere. But in case of the small cap companies and mid cap companies, we are taking that risk, because it can happen that that company does something wrong and it is out of the market, because those companies still have to realize their full potential in order to become a large cap company. So these companies are still working upon themselves. They are finding new opportunities, finding new themes to work upon. So these companies have a huge potential in future. Only those fundamentally strong small cap and mid cap companies who are working dynamically with the changing environmental conditions have a good scope for future. So if we are investing into these companies, we are taking more risk, because the small cap companies and the mid cap companies are new into the market. They're not as large. तो छोटी कंपनीज में पैसा जब हम करते हैं इन्वेस्ट, वी जस्ट सी अ ग्रोथ अपॉर्चुनिटी, फ्यूचर में कुछ अपॉर्चुनिटी है तो उस कंपनी में डाला पैसा. सो इट इज अ थिंग ऑफ हाई रिस्क हायर एक्सपेक्टेड रिटर्न. Okay, that is why we have seen in the past also those small cap and mid cap companies have outperformed the large cap companies, because people have taken risk in these small cap and mid cap companies and outperformed the large cap companies. So that is nothing but the size premium. छोटी कंपनी में अगर आप अपना पैसा डाल रहे हो, तो यू आर पेइंग अ प्रीमियम टू देम फॉर अ हायर रिटर्न. अगर हायर रिटर्न चाहिए तो हायर प्रीमियम भी पे करना पड़ेगा. सो दैट इज व्हाट यू आर डूइंग इन केस of the small cap and the mid cap companies. You are paying higher premium to get higher return. Okay, so that is the concept of size premium. So that was the CAPA model we tried to discuss. So if someone asks you in the interview, tell him that the capital asset pricing model, it helps you to know an equilibrium relationship between the cost of equity and the systematic risk, which is also called the non-diversifiable risk, and which is measured by beta. Further, in advancement of this model, people also use the company specific risk, which is nothing but the unsystematic risk or the diversifiable risk, and also include the size premium, which is nothing but a small cap company or a mid cap company performing better than a large cap company, because these companies are still to realize their full potential in future. And for that, you are paying a premium to get higher expected return. That's it. The person would be impressed that you know all about the CAPM model. Okay. Further, there are a large number of assumptions as well for CAPM model, because एक model अगर बना है तो you need to have certain assumptions for that. So I would be discussing some of the most important assumptions of the CAPA model that must be in your mind 24/7. Okay. And again, people also ask you the assumptions of CAPA model in the interview. Okay. So what is the first assumption of the CAPA model? The first assumption of the CAPA model is the CAPA model assumes that the investor is rational. Okay. The investor is rational. That he won't be taking or he won't be undertaking any decision that will give him a very less amount of return or something which is kind of foolish for him in order to undertake the concept of CAPA model. इसका मतलब ये है, a rational investor is a person जो उन्हीं सिक्योरिटीज में इन्वेस्ट करेगा जो उसको आती है समझ, and he would be caring for more return अगर वो ज्यादा रिस्क ले रहा है. If that person is taking higher risk, that person, that rational investor would be expecting higher expected return. अगर वो एडिशनल रिस्क नहीं ले रहा है तो दैट पर्सन वोंट बी एक्सपेक्टिंग हायर रिटर्न. दैट्स व्हाई ही इज रैशनल. उसे मार्केट के रूल्स पता है. हायर द रिस्क लोगे हायर एक्सपेक्टेड रिटर्न होगा. अगर सिर्फ गवर्नमेंट सिक्योरिटीज में पैसा डाल दूंगा तो उतना ही रिटर्न मिलना है. एंड उन्हीं सिक्योरिटीज में ही इन्वेस्ट एंड उन्हीं सिक्योरिटीज में ही टेक हायर रिस्क जहां पे कुछ रिटर्न का पोटेंशियल है. ओके. सेकेंड assumption, this model also assumes that the market is in equilibrium or the market is perfect. A perfect market की बात मैं कर चुका हूं, but in simple terms, if you're having your portfolio and your portfolio consists of just say like 20 stocks, and you will be comparing the returns of your portfolio in active investing with that of the index. Index is basically your Nifty or Sensex. So you will be comparing the returns of your portfolio with that of index. If you are actively managing your portfolio, obviously you would want कि return, अगर आपके पोर्टफोलियो का 15% का रिटर्न आ रहा है तो निफ्टी का रिटर्न उससे कम आना चाहिए. बिकॉज दैट इज द मेन थिंग, यू हैव क्रिएटेड अ पोर्टफोलियो फॉर दैट, है ना, ताकि तुम निफ्टी को बीट कर सको. बट सीएपीएम मॉडल बोलता है कि अगर आपके पोर्टफोलियो का रिटर्न 15% है तो निफ्टी का भी रिटर्न 15% ही होगा. योर पोर्टफोलियो, योर इन्वेस्टमेंट और योर स्टॉक्स कैन नॉट आउट परफॉर्म निफ्टी. ठीक है, बट रियल लाइफ में दीज assumptions डोंट वर्क. ओके. थर्ड थिंग, he also assumed that everyone has same expectations from the market. Everyone has homogeneous expectations. Okay, and they tend to sit on the same utility curve. The utility curve is nothing but, as the people used to study in finance, like these kinds of curves. Okay, and इसमें बोलते थे ना, the higher curve has higher utility and lower curve has like lower utility, and these curves cannot intersect one another, right? तो इसके कहने का मतलब है everyone has same expectations और homogeneous expectations and they sit on the same utility curve. मतलब अगर कोई इस कर्व पे बैठा है तो सारे दुनिया के इन्वेस्टर्स इसी कर्व पे बैठे हैं. बट दिस इज नॉट पॉसिबल इन रियल लाइफ. एवरीवन हैज डिफरेंट एक्सपेक्टेशंस फ्रॉम द मार्केट. किसी को लगेगा कि यूटिलिटी कर्व उसके लिए लाइक, मतलब देखो, आई जस्ट इरेज दिस, टेक अ न्यू स्क्रीन. हाँ, सो इन टर्म्स ऑफ यूटिलिटी कर्व हो सकता है कि मान लो यू हैव क्रिएटेड अ यूटिलिटी कर्व्स हैं, होते हैं बहुत सारे, एंड हायर द कर्व गिव्स हायर सेटिस्फैक्शन. तो किसी के लिए द हाईएस्ट कर्व कैन बी दिस, एंड हो सकता है उसके नीचे उसके मतलब कि बहुत सारे कर्व्स हों. फॉर अ सेकेंड पर्सन हो सकता है कि उसके लिए लाइक कर्व ये वाला हाईएस्ट हो. किसी थर्ड पर्सन के लिए हो सकता है उसके लिए कर्व ये हाईएस्ट हो. ओके. So again, like different persons can have different expectations from the market and they can sit on different curves. ऐसा नहीं है कि पूरी दुनिया की जनता बस एक ही कर्व पे बैठी है. अगर मुझे लगता है कि मुझको मार्केट से 15% का रिटर्न मिलेगा तो सारे लोग जो यूट्यूब लाइव देख रहे हैं उन्हीं को भी लगता है कि 15% का मिलेगा. किसी को लग सकता है कि 20% का मिलेगा, किसी को लग सकता है कि 5% का मिलेगा. सो एवरीवन हैज लाइक सम डिफरेंट एक्सपेक्टेशंस. ओके. The fourth thing, what did he say? The CAPM model said the securities are perfectly divisible or infinitely divisible. मतलब अगर मार्केट में तुम एक शेयर खरीद रहे हो तुम 0.5 शेयर भी खरीद सकते हो. And we all know it is not possible. We are trading in market. We are not trading in the US market. Because in US market, it is possible to purchase even the fractional of shares. And also we are not in the cryptocurrency market जहां पे हम 0.00001% भी बिटकॉइन खरीद सकते हैं. ठीक है. तो again the securities are not like divisible in case of the Indian context. So CAPM model, it doesn't hold true in this case as well. Also, he also said, the CAPM model also said that short selling is permitted. तुम कितनी भी short selling कर लो मार्केट में, infinite short selling. अब a large number of people would ask me that what do we mean by short selling? देखो, short selling is basically you are selling something in the market which you do not own. अब तुम बोलोगे तुम मतलब कि कैसे हो सकता है ये? See, it is not mandatory that you should purchase a stock before selling it. तुम बिना स्टॉक को भी परचेज करके उसको मार्केट में सेल कर सकते हो. Provided with one condition, you have to buy it back on the same day, ताकि बैलेंस न्यूट्रलाइज हो जाए. Okay, so short selling is permitted only for the purpose of trading in India. That is, मतलब एक दिन में बेचो और एक में खरीद लो. Ideally, people buy the stock and sell the stock. Why? People buy the stock because they believe that the price of the stock will rise in future. Okay. But what happens in case of short selling? If you believe the price of the stock will fall in future. तो अगर तुम्हें लगता है कि आज अगर प्राइस 200 रुपीज है और आगे जाके प्राइस गिरने वाला है, तो तुम 200 पे स्टॉक को बेच दो एंड 150 पर जैसे आए तुम खरीद लो. अगेन प्रॉफिट तुम्हारा 50 रुपए का ही होना है. ओके. सो इन शॉर्ट सेलिंग व्हाट हैपेंस, यू आर सेलिंग द स्टॉक विच यू डू नॉट ओन. एंड जो स्टॉक तुम ओन नहीं करते, अब तुम बोलोगे कि मतलब कि स्टॉक मार्केट, हाउ द स्टॉक मार्केट विल अलाउ अस फॉर द सेम, यू बोरो द स्टॉक फ्रॉम अ थर्ड पार्टी. एंड दैट थर्ड पार्टी मतलब कि तुमको नहीं पता होता कौन है, दैट स्टॉक ब्रोकर अरेंजेस फॉर यू. ओके. तो जब तुम बेचते हो मतलब किसी का स्टॉक लेके, यू हैव टू लाइक रिटर्न दैट स्टॉक एज वेल. ठीक है. और उसका मेन काम वो स्टॉक ब्रोकर करता है. ठीक है. You don't even know from which party you have taken the stock, or you have like borrowed the stock and sold in the market. And once you buy the stock, you have to give back the stock to the old person as well. ठीक है. तो तुम्हारा जो रिटर्न होगा वो तो तुमको मिल ही जाएगा. बट लाइक व्हाट हैपेंस इन केस ऑफ शॉर्ट सेलिंग, लाइक कभी कभार अब तुमने लाइक जिससे स्टॉक खरीदा है, तो दैट पर्सन माइट बी फियरफुल ना कि अगर उसको अपना स्टॉक वापस नहीं मिला तो लाइक उसके पैसे तो गए. सो व्हाट हैपेंड, द पर्सन हु इज शॉर्ट सेलिंग, अगर मैं मार्केट में मैं शॉर्ट सेलिंग कर रहा हूँ, मैं स्टॉक बेच रहा हूँ, तो आई विल बी कीपिंग अ मार्जिन इक्विवेलेंट टू द अमाउंट मैं जितना बेच रहा हूँ. अगर 200 रुपए का स्टॉक मैं मार्केट में बेच रहा हूँ और मुझे लग रहा है कि 150 रुपए का हो जाएगा, तो 200 रुपए का एडिशनल अमाउंट आई हैव टू कीप विद द स्टॉक ब्रोकर एज अ मार्जिन. कि अगर वो 200 रुपए मान लो कि शॉर्ट सेलिंग मार्केट में हुई ही नहीं, अगर 200 की जगह प्राइस पर 250 चला गया, हाँ तो मेरा तो हो गया लॉस. ठीक है. बट मैंने स्टॉक तो किसी और का बोरो करा है ना, अगर मेरा लॉस हो गया तो हो गया. बट जिसका स्टॉक बोरो करा है उसको मैंने एक इनडायरेक्ट वे में आई हैव गिवन हिम द गारंटी. ठीक है. कि तुमको लॉस नहीं होने दूंगा मैं. ठीक है. तुम्हारा स्टॉक मैं वापस करूंगा. तो इसकी वजह से क्या होगा, स्टॉक ब्रोकर मुझे बोलेगा कि अगर मैं 200 रुपए का स्टॉक, इफ आई वांट टू शॉर्ट सेल, देन आई हैव टू कीप 200 रुपीज इन द मार्जिन अकाउंट एज अ लेवरेज मनी. ठीक है. अगर 200 रुपए मेरे लुट गए तो 200 रुपए वापस उसको मिल जाएंगे. ठीक है. जो मतलब कि बोरोवर होगा. तो दैट इज वन थिंग विच हैपेंस इन शॉर्ट सेलिंग इन एंटिसिपेशन ऑफ अ प्राइस फॉल इन फ्यूचर. ठीक है. अब एक और एजम्पशन आती है, ही सेज कि मार्केट में कोई ट्रांजैक्शन कॉस्ट नहीं है ना, एंड कोई टैक्सेस नहीं है. अगेन इट इज इम्पॉसिबल. तुम कभी मार्केट में शेयर खरीदते हो और बेचते हो, तुम्हारे कुछ टैक्सेस तो नहीं, तुम्हारे लाइक मतलब कि ट्रांजैक्शन कॉस्ट तो लगते ही हैं. बी इट योर लाइक सिक्योरिटी ट्रांजैक्शन कॉस्ट और कमोडिटी ट्रांजैक्शन कॉस्ट इन केस ऑफ कमोडिटीज, थोड़े बहुत चार्जेस तो लगते ही हैं तुम्हारे. एंड जब तुम एक साल बाद जब शेयर्स बेचते हो, तो अगर तुम्हारा गेन जो है वो लाइक 1 लाख से ज्यादा है, तो 10% का टैक्स लगना ही लगना है. अगर तुम शॉर्ट टर्म में बेच रहे हो, ठीक है, तो 15% का टैक्स लगना ही लगना है. सो ऑल दीज थिंग्स हैपन इन द मार्केट. तो रियल लाइफ में लाइक दीज थिंग्स आर नॉट पॉसिबल. ओके. So that was like one more assumption of this model. So these were like some of the assumptions which you people must know, ठीक है, of the CAPA model. and इतनी assumptions काफी हैं. इसके अलावा 3-4 assumptions और होंगी, but like these are the main assumptions that you people must know, and these are important for you. Okay. That is one thing that you people must know and keep in mind. Yeah. अब CAPA model की बात हो रही है. From a CAPA model, we try to derive a line. From the CAPA model, we try to derive a line which is the SML line or the security market line. The SML line, or you further call it what as the security market line. Okay. The security market line, it takes into consideration the beta or the systematic risk on the x-axis, and on the y-axis you have the expected return. Okay, that is your security market line. Ab security market line is again telling you an equilibrium relationship between beta and expected return. जितना ज्यादा तुम रिस्क ले रहे हो, जितना ज्यादा तुम राइट हैंड साइड पर जा रहे हो, उतना तुम्हारा ये भी ऊपर जाता है. ठीक है. और expected return is also increasing. So again, SML model People think it is different from CAPM. It is not. It is derived from SML. Sorry, it is like derived from the CAPA model. So, in easy terminology, we can say that the security market line or the SML line is a graphical representation of the CAPM model. CAPM model तुमने formula पढ़ लिया, theory पढ़ ली, assumptions पढ़ लिया. If you want to show it in a graphical manner, then how you gonna show it? We're gonna show it through a security market line. And it tells you the equilibrium relationship again between beta and expected return. And CAPM model में भी तुम beta and expected return ही use कर रहे हो. So that is one thing you need to take into consideration. Okay. अब all the securities which are lying above the CML, यहाँ पे जितने भी सब securities होंगी, these are considered as undervalued securities. मतलब these securities, the market has not yet realized their full potential. They're still below the fair market value and उनका value बढ़ने की chance है. And all the securities below the SML line, they are classified as overvalued. मतलब fair value से भी ज़्यादा ऊपर जा चुके हैं. And if the market doesn't realize any good potential in them, they would come down at their fair market value, or further, they can also become undervalued at a later point of time. So CM, तो तुमसे अगर कोई, and this is the SML line. If someone asks you that what is the security market line, the security market line tells you the graphical representation of the equilibrium relationship of the expected return and beta. The values of securities above the SML are the undervalued securities, and the value of the securities below the SML are the overvalued securities. So these things you need to know. So this was about the CAPM model and the model of SML, like which we talked today. Further, the capital structure is not yet over. We'll be continuing with the capital structure class 3 tomorrow. Tomorrow, we'll be continuing with it from 8:15 p.m. onwards. Okay, so do attend that class if you want to learn more about these models, because further we'll be talking about the capital market line, how it is different from the SML line, capital allocation line, market portfolio. So all these things like we'll be talking about in tomorrow's session. Okay.